Asia becalmed as Nvidia's forecast temporarily soothes AI fears. Asia opened the session like a safe harbor. After a previous day of heavy swell, the water still churns underneath, but Nvidia's latest forecast has, for now, dulled the sharpest edges of the AI bubble anxiety that had gripped global markets. Traders came in looking for trouble, and instead found a company that continues to defy gravity. Nvidia printed another monster quarter, with data center revenue surging to a record $51.2 billion, and a forward guide of $65 billion, miles above the street's already oxygen-thin expectations. In post-market trade, the stock jumped as much as 4%, dragging the whole AI complex higher, and giving risk-takers one more reason to stay in the cockpit for a potential year-end push. But make no mistake, this is still a market balancing on a wire stretched between AI euphoria and debt-filled reality. Nvidia's results may have bought the tape a reprieve, but they haven't rewritten the script. They've simply reminded traders why they still cling to the idea that one last Santa rally can be extracted from the AI supercycle. Nvidia is the index's locomotive. The question is whether it has enough steam to pull the whole freight train into December. The macro backdrop, however, is anything but rate cut tranquil. US growth looks more like a runaway train than an economy headed for rate cuts. With delayed data now trickling in after that absurd 43-day government shutdown, the Atlanta Fed's GDP now model is flashing 4.2% for Q3. A print that, if half accurate, raises uncomfortable questions. Why on earth would the Fed be easing into an economy running that hot? And the minutes from the late October meeting underline the divide. Several Fed officials didn't want to cut at all. Others reluctantly went along. That internal battle spilled straight into markets, where December rate cut odds were slashed to about 30%, giving the dollar its best day in 2 months. December's FOMC could easily turn into a historic descent fest. And yet, in this messy liquidity soup, Nvidia arrives as a kind of temporary balm. Not a cure, but an excuse. An excuse for equity traders to believe the AI locomotive still has enough thrust to drag the broader market into a year-end lift. An excuse to postpone thinking about a December FOMC that could be far more contentious than expected. An excuse to ignore a yen that no longer behaves like a shock absorber. An excuse to pretend that repo markets always fix themselves before they break. So Asia sits becalmed, not serene, but suspended, carried by Nvidia's glow for at least one more session. Whether that glow is the first flicker of a renewed AI chase, or just the last flare before traders start counting liquidity puddles, is the real question. For now, the market is willing to give Nvidia the benefit of the doubt.